Hello and welcome to the day ahead. It's Wednesday, October the 26th. I'm Andrew Gagan. Well, locally, it's all about reaction to the federal budget, but before we get to the detail, let's check global markets. US stocks closing sharply higher as soft economic data hinted that the Fed's aggressive policy is taking effect. The real estate sector leading the gains. On the earnings front, shares of Google parent Alphabet fell as much as 6% in after-hours trade after the company missed quarterly revenue estimates as advertisers cut back spending. Microsoft fell more than 2% after the bell, despite beating revenue estimates, with the shift to hybrid work powering demand for its cloud-based services. Coke rose after it upped its revenue and profit forecast there as it lifted prices, and forecast demand there will remain resilient. Shares in General Motors accelerated as it reaffirmed its outlook after posting solid earnings. Aerospace company Raytheon saw revenue increase, but its shares slid after it trimmed its sales outlook. And in US economic data, consumer confidence fell more than expected this month, while the Richmond Fed Manufacturing Index fell into negative territory. The soft data saw the US Treasury yields ease, the 10-year falling 15 points to near 4.08%, the 2-year at 4.47%. Major currencies firmed against the US dollar, the Aussie rising from close to 63 cents to above 64 cents has since come back. Well, the Albanese government's first budget has focused on reining in the deficit, with Treasurer Jim Chalmers warning of difficult times ahead for the economy as inflation drives cost of living pressures. Its forecast gross domestic product will grow at 3.25% this year before falling back to 1.5% in the 23-24 fiscal year, with the unemployment rate rising from 3.5% to 4.5%. The deficit is forecast to shrink this year from the $78 billion predicted in the April pre-election update to $37 billion, thanks to revenue from soaring commodity prices and low unemployment. Inflation is expected to hit 3.75% later this year before moderating to 3.5% in the next financial year. Official inflation data will be released today, with recent flooding events expected to see a jump in prices. The government has unveiled $8.1 billion in infrastructure spending, pledging $10 billion for its Housing Australia Future Fund, with the aim of building 1 million new homes and boosting investment in affordable housing over the 5 years. Fully funded paid parental leave will be extended from 18 to 26 weeks from 2026, with more than $4.5 billion to be spent on childcare over the next 4 years. Almost 500,000 TAFE and vocational education places will be funded, and $1.4 billion will be spent on medical treatments, while the maximum co-payment for prescriptions will be cut from $42.50 to $30. $25 billion has been dedicated to climate change initiatives until the end of the decade, which includes upgrading transmission networks, community batteries and tax cuts on EVs. Defence spending rises 8% to more than 2% of GDP over the next 4 years. And $3 billion will be put aside to meet disaster recovery costs. Well, the Australian share market is set to open strongly this morning, with ASX futures up 0.8%. On the commodities front, global oil prices rose, iron ore futures were flat and base metal prices were mixed, while the gold futures price rose modestly. Bitcoin has climbed above $20,000. The focus today will be on those stocks likely to benefit from the government's budget measures. Those sectors include housing, climate, battery metals, infrastructure and childcare. That is your day ahead. We'll see you again tomorrow.